Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio in Times Square, New York City, we have Rob Krugman, Chief Digital Officer over at Broadridge. We're going to discuss why there's persistent interest in the crypto space and users of crypto assets. Rob, it's great to have you with us. Welcome to TradeTalks.
Thank you so much for having me.
Let's talk about Broadridge's digital disclosure report. You polled 2,000 crypto market participants. What was the methodology behind it, and what were some of the key findings?
Absolutely, yes. So what we did is we wanted to understand, kind of using a design thinking hat, what do actual holders of cryptocurrencies think about? And so what we did is we spoke to 1,000 people. We surveyed 1,000 people in the United States, 500 in Canada, 500 in the UK. Some science to that. We wanted to see if there were fundamental differences between what holders in the United States think about versus some of the other regions. And what we included was we included about 50-50 people who are current holders of assets and people who are prospective holders, really defined as they're thinking about buying in the next 6 months. So we wanted to get both perspectives and understand that a little bit. Some of the findings, one of the initial findings was that, and maybe this is not overly surprising, is that people look towards traditional metrics versus some of the more crypto native metrics. So when I say that, what do I mean? I mean things like financial metrics, information about the holders, information about the founders, information about risk and security, versus things I think that within the crypto space we are familiar with, like tokenomics and network and platform activity. And we didn't go overly deep into that, but our assumption is it highlights that it's not that people don't care about those metrics, is that they may not necessarily understand them, and it speaks to the need for financial literacy as we actually start to build out disclosure regimes for this type of work.
And how does this compare to metrics of traditional asset classes?
Yeah, I mean, it's different. I think it's, and probably what we should think about is every time you introduce a new asset class, you have to introduce a new glossary of terms. And that's where this really comes into, because tokenomics, you ask people if I went outside on Times Square right now and asked people what tokenomics, they probably look at me like I have 3 heads. I think we have to kind of figure out how do we describe that to folks so they understand what it means, potentially actually comparing it to traditional assets like the number of shares that are held, the number of shares that float, inflation, deflationary type measures, and how that actually relates to the performance of the actual asset itself.
So how are digital market participants accessing information on cryptocurrency?
Everywhere. So I think it speaks to the decentralized nature of digital assets that people are looking at a number of different locations. Not surprisingly, the #1 location we found was the actual crypto websites themselves. So usually run by a foundation or lab that's actually supporting the crypto project, provides information, and that's where people look. Second and third were the exchange and the broker. And the broker actually took us a little bit by surprise because, at least in the US, actually in Canada as well, there's not a huge number of brokers that are actually participating. Usually you work directly with an exchange. And so it may actually highlight that folks would like to, in the future, receive this information from their broker.
What are some of the challenges operating in a 24/7 market when it comes to disclosure and transparency?
Yeah, I think one of the biggest ones that we talk about is domicile, right? So I work for Broadridge. We're a public company. We trade in the United States and we file with the SEC. Think about Ethereum, right? It trades in hundreds of markets across the globe, hundreds of exchanges across the globe, and then it probably is going to sit within 80+ regions that have different regulatory disclosure rules. So how do we think about actually providing the appropriate information to satisfy those emerging regulatory frameworks that are starting to be created? And what we really tried to focus on, and what we think, is the data itself is not going to change. It's going to, how it gets presented and who's responsible for presenting it, that's likely will change, domicile by domicile.
Right. Well, speaking of regulation, it's fortuitous that you're with us on this Wednesday, July 13th. A big ruling in the crypto space today that Ripple, I mean, the news, this has been going on for a number of years now, and they got handed what sounds like a good outcome for them.
I think a pretty big win for them. I think, the idea that it is not a security, which is what I think most people are reading into the actual, the ruling. I think as we think about it, regardless if it's considered a commodity, utility, or a security, and the way I think about it, use case by use case. Am I using it to buy something? Am I using it to send money? Am I using it to run applications on top of a blockchain? All different use cases. And from a data perspective, I think what becomes important is how do we ensure that the appropriate information is being presented regardless of use case to the potential holders and the existing holders so they actually understand what's going on with their investments or their holdings. But I expect that what we're going to see coming out of this ruling is a real push. We're going to see more tokens start to be offered. People who are scared to offer tokens, projects that were thinking about it, are going to start to pop up all over the place. And I expect renewed interest from the traditional financial services community about how do they make these products available to their customers.
I mean, perhaps this was a catalyst that was needed to get legislation in motion here rather than relying on the regulatory agencies. I mean, just yesterday, reintroduced to get a regulatory framework built around crypto.
Yeah, and it's interesting, if you kind of read through the Loomis-Gillibrand bill that hit yesterday, one of the things that's interesting is it calls for the formation of an SRO, similar to FINRA, and it's the idea that it would begin to set standards. I also think that there is beginning to be a recognition that what the US can do here is we can set the gold standard of how these things should work, because the market's looking for that. And I think if you speak to the cryptos, if you speak to the different exchanges and the different communities that are out there, people aren't saying we don't want to be regulated. They're basically saying we need to be regulated. We understand that. That's how we mature and how we grow as an industry. Tell us what we need to do. And don't just enforce, but tell us, and we're happy to comply. Well, in some cases, and I'm sure in some cases there'll be some pushback.
Which makes complete sense. I mean, you want to be able, you don't want to have these regulatory overhangs on your head, and we also don't want this innovation to be offshored when we know that we can lead right here.
It's, you know, I get excited. I'm an innovation guy. I'm kind of a futurist, and when I think about the potential of both the cryptocurrencies, stablecoins, and the underlying blockchain, it's so exciting to think, what is this impact this is going to have on financial services over the next 5 to 10 years? I think we're going to look back and say, today maybe was actually a watershed moment where the innovation that has been happening for the last 10 years and slowed down a little bit with the crypto winter kind of took off again. And I think, and it reminds me a lot about 2000, 2001, where we had the dot-com bubble. And through that, there was a focus on infrastructure. And I think that's what we're seeing again today in this space, is that people are turning their focus to how do I actually build the infrastructure so this can actually be a real growth engine going forward, and we can provide assurances to the public and to holders that their money is going to be safe and this is going to work.
All right, we appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.